Well, good Monday morning, everybody. Welcome to our Trading a Smaller Account webcast. I'm Connie Hill. Happy that you would join me here, seeing lots of familiar faces out in the chat. Last week I was here for Barb last week, and I showed you a scan to help you maybe find some stocks that were moving in the given day. Well, I'm going to show you how the results of some of those trades turned out that we found from that scan. And we're going to use some more examples today that are coming exactly from that scan. So if you happen to miss that class, no worries. I'll put a link in it in the show notes. And you can also go back to the archives. If you're a subscriber to our Trader Talks, it makes it really easy for you to find the playlist. So I am joined in the chat by Mike Fairborn. I'm glad Mike's here. He's a friend as well as a very experienced coach. If you have questions, go ahead and chat those questions in. I'm going to try to keep track of them. Mike will try to keep track of them, maybe answer some questions that I can't quite get to. But we do want you to get your questions answered here. Hope you're following us on X. I'm Connie Hill CS. Mike is Mike Fairborn CS, and we'll put out educational content throughout the week, things that we're noticing in the markets or things that might be coming up that we think you might find noteworthy. We're going to share those pieces of information with you. All right, let's go through our disclosures and lay out our agenda for today. Options carry a high level of risk and are not suitable for all investors. What we talk about is for information and educational purposes only. Don't consider it a recommendation. We're going to be using the Paper Money software application. It's what you download to your computer. It's the most robust version of Thinkorswim. Past performance is no guarantee of future results. Now, I want to make you aware of some upcoming events, because if you can get there or you live near there, should have fixed Washington here. Sorry, that's Washington. Pretend the M's over there. In any case, if you can get to any of these events, they are fantastic. People love them. If you were there at our most recent New York Market Drive event, let us know. Let us know how it was for you in the chat. Okay, so we've got a workshop coming up August 8th and 9th in New York. Chicago is going to be the next weekend, August 15th, 16th, and then Washington, D.C. in September. And it'll be a great time of year to go visit D.C. as the summer's cooling off and things are pleasant. Now, you guys know Barb is out for reconstruction, right? She's probably told you she is out for surgery for a few weeks, getting her knee replaced. And I'll tell you, I could not do all that Barb does if I needed a knee replaced. Man, she keeps up doing everything she does, including skiing. I would not be so adventurous that way. Now, typically in this class, we're going to take a look at the market, see what's going on. We're going to be looking at a lot of example trades, both new and some that we did last week. I'm going to show you kind of how some of those happen to be playing out. Now, in this class, we have some guidelines that we stick with, right? We're making the assumption that you have a smaller account, and the assumption here is $20,000. Now, your account might be smaller than that, or the amount of your account that you dedicate to, say, active trading purposes. It doesn't have to be $20,000. All right, yours might be bigger, it might be smaller, but we're going to say we don't want any maximum positions of $5,000 or more. We don't want to risk more than $400 to $500 per trade, so we're going to stick with that in our risk tolerance as we position size. We are looking at shorter time frames, so short to intermediate time frames, not really looking at holding buy and hold types of things in this class. And we're going to go both bullish and bearish depending on what the market is giving to us. So when we're bullish, any of those strategies could be offered, right? We might go looking in those places. When we're looking at going long a stock, we're probably looking at something maybe that's a smaller dollar value for that. But some of these other strategies, we might consider some that are a little bit lower. They could be a little bit higher price as opposed to the stock being low price. Okay. When we're bearish, we will look at long puts, short put verticals, long put verticals. And when the market's a little bit more neutral or transitioning, we might look at some iron condors or some calendars. All right. Let's go ahead. Let's look at what we're starting out here with the market today. Now, last time I checked, the indices were down, all of them. The Dow, the NASDAQ, the S&P 500, as well as the Russell 2000. And so we've got kind of a 6-month look right here with the SPX. I'm going to zoom in a little bit. This blue trend line is a 10 exponential moving average. This red line is a simple moving average. So when we're focusing on those shorter time frames, we typically are going to be wanting to use shorter term moving averages. Say something like a 100 or a 200-day moving average might not be that useful to us. Okay, so it looks like the S&P is pulling back a little bit today, but what did it do last week on Friday? Another new high, right? In fact, it's been over the last, say, week and a half, it's been grinding higher and putting in new all-time highs, new all-time highs. So definitely seeing some bullishness in the market. Dow Jones is being bullish here as well. Let's pull it up. Oops, too much stuff there. There we go, DJI. It's pulled back a little bit today. Now, it didn't quite get back to its peak moves in February, but it's almost there, man. It's knocking on the door. I've got a Fibonacci retracement on there letting us know, yeah, it's getting close to that all-time high that it had previously. NASDAQ, it's been setting new highs with the S&P. Yeah, Friday, it set another new high at their 22,896. So definitely is continuing bullish as well. Now on the chart, I have also a MACD. Some of you might be familiar with a MACD, others of you might not, but a MACD gives us an idea of how strong the momentum is and if it's more bullish momentum or bearish momentum, depending on if it is on the, say, the top side of zero or if it's on underneath the zero line, which is kind of invisible here. You can see a zero usually right here. It's kind of being overshadowed by the actual reading right now on the MACD at that point at 29.75. But you can see it ran up, it pulled back. Maybe the momentum is starting to slow down. Okay, we'll have to see. The peak on this last run when it set a newer high really didn't get past these previous peaks. Okay, so yeah, maybe the momentum is starting to slow down here a bit. All right. Now, what I'd like to do here, we need to look at the VIX real quick too. Volatility, definitely off its high points, right? When we had a lot of fear in the marketplace and the VIX ran up because the put call ratio was just totally skewed to more puts than put buying than call buying. But more recently, we can see, yeah, it's come back here to these lower levels. Today it looks like it's at 17.63 at this exact moment. So it's been in those lower areas as opposed to up here near, above, say, 25 or 24, 28, right? Or even getting up into this 30 range, then we're starting to feel the volatility. We're starting to see it quite a bit. And usually the market will be pulling back in those areas at those times. Not really doing that right now. Let's see. Jason has a question here. Anyone else seen the YouTube settings overlay on the top of my presentation? Jason, you can make it go full screen. What you're experiencing might be a little odd, I think. One of two things. Refresh your browser, see if it'll refresh the view of how it's showing you. Or you can go down on that gear and go to the chart settings. And instead of the auto, which sometimes puts it at a little low grade, put it up to a higher one, like a 1080p. And typically that's going to be a nicer, sharper view for you. So check that out. All right. So the market's overall bullish, even though we're having a little bit of a lull in what's been going on. We can't hit market highs every single day, right? We've got to have some pulling back along the way. That's going to be more typical. Now, last week, I introduced you to a scan. I mentioned that to you, and we did some trades off that scan that I just want to do a quick follow-up and tell you about. The trades that we did, I put in a basket called Trading a Smaller Account, and those 4 trades that we're still in are listed here. But there are a couple that we put in that hit their targets immediately. Okay, so I want to start out with a couple of those. First Solar was one of those. Let's go to First Solar on the chart. and FSLR. And I'm going to just maybe come in here maybe about the last 3 months so we get a tighter view of what was going on there. And so we put this trade in last Monday on June 30th. So June 30th was right here, and it looked like it was, maybe that's a little too far, looked like it was breaking above some resistance here, about that 159-ish area. Looked like it broke it, kind of tested it again the next day, and continued to run up. Okay, now if I go to my account statement area here, we put in First Solar. We got in on Monday. We got in at a net debit. We did a long call vertical trade here with a $5 wide spread. We paid $240 for it. So we were risking $240 to make what? To make $260. Well, we put in an order that day and said, hey, if we get to $396, we're going to be happy with that amount of profit, right? We're not going to squish everything out of it that we might want or might be available, I should say. But if we get a big chunk of it, we're going to take it, we're going to jump out. Sure enough, the next day, July 1st, and this was pretty early in the morning, about 7:38 here Mountain Time, so about 8 minutes after the market opened, it went ahead, it filled our order. We got an even nicer price on it. Instead of $396, we got filled at $425, and sometimes that'll happen. You know, first thing when the market opens, stocks are kind of jetting all over the place, and option prices vacillate greatly. And so sometimes on some stocks, you might get filled better than what you expected to have or anticipated. And that's exactly what that did. So on this particular trade, it was up about, we were able to get about a 70% return. I think we had said, hey, if we get 70%, let's get out. Turned out we're down to about 77% and $370 because we had 4 contracts on it. Okay, so that was a nice little add to our smaller account. Man, if we could do that consistently, wouldn't that be nice, right? Now, that was a little unusual. We don't really expect to hit our targets immediately like the next day, but it's kind of nice when we get some of those things to happen. Okay, so that's how First Solar ended up. Another one that we did that same last Monday was Reddit. Now, Reddit's, it's been moving around quite a bit. Let's kind of zoom in here. What did things look like on the 30th? Well, they looked like this candle here. It had run up, it had pulled back, and we were getting kind of a little bounce here. Some might call it a close. It was looking like it might close above the high of the low day, although we were early in the day. So maybe we'd be going on a trade higher than the high of the low day here. And not waiting till the close to really verify if it was going to be a close above the high of the low day. But it ran up, and what happened? Well, not on July 1st, but July 2nd, the next day, it went ahead and hit the target that we put in for it here. So it would have been on this green candle day. So when we put in some profit targets where we're saying, hey, we're happy if we get this amount, we're happy to get out. It's nice to just let the system execute it for us, okay? On this one, if we go to our Reddit, we got in for $1.15. It was a $2.50 wide spread. So we risked $1.15 to gain what essentially $1.35. So risking less than what we had to gain. We said, hey, if we get $2.32, we're going to be happy campers. Yeah, we'll be thrilled, right? We got filled even nicer than that. We got filled at $2.70, which is a little bit unusual. Again, these might be situations that are happening to us in paper money that maybe are a little bit more rosy than what we might really see in a live account. But sometimes that can happen, especially if you got those orders sitting out there. All right. So those were 2 trades that hit boom, boom, and hit the target right away. I want to show you another trade that is still in our account, QUBT. This is a smaller price stock. It's quantum computing stock. We sold the 17 puts here, okay? We brought in a credit of $1.17, and we did it on 2 contracts. because we knew that if we were put 200 shares of the stock, we didn't want it to take up more than $5,000 in our account. So that's why we limited it to 2, so we could only be put 200 shares. The intent isn't necessarily to take ownership of the stock, but if it does, we're happy about it because we wouldn't want to sell puts on a stock we don't mind owning. So look where this is today. We brought in 117 right now. If we wanted to buy it back, it's at about 37, maybe 38 cents here. So it's making some decent progress. We sold these on June 27th. So that would have been a week ago from last Friday. So about a week and a half ago. Let's see what the chart looks like. We do not have an order out here to get out if we want. So that's going to be something we're going to consider here. Okay, so QUBT. You can see I put a little O here when we got in. This blue line that's dotted is our 17 line. We are looking for the stock to stay above that. Ran up really nice. Actually ran up a little bit higher here today. Now, for those of you that maybe follow this philosophy and try to get out when you get a percentage of the max gain, I would like you to type into me, what percentage are you happy with? Okay, those of you that kind of follow this same idea of putting in an order, what percent makes you happy? Okay, that you're like, I can live with that. Kind of going back here, we collected $1.17, and right now we're at 37 cents. So I'm just going to say, all right, I'm going to round it to 38 cents. We're going to divide that by our $1.17 because we want to know how much of it is left. So 32% is left, which means we've collected 78%. Okay. Now there might be some of you that are happy with that profit. Okay, you guys are sending me some answers here. Sharon's about 70%. Chris likes 70 to 80%. Brian says, when it gets down to about 15% left, which would mean 85% of the gain. Ray has a range 50 to 60%. So that's varying 50 to 80%, says Debbie. Tom's 50%. Vicky Lou, 70%. Isaiah, 80%. Felipe, 80%. Marcus, 505%. I bet you were 50% on that. All right, Kevin. So you guys are measuring and determining for yourself where your comfort level is. I would suggest, because we're up about 78% in this trade, I'm going to suggest we just go buy it back and be done with it. Okay? Free that cash up so that we can put it towards another opportunity because we've got the lion's share out of it. I appreciate you letting me know kind of where you stand as far as that percentage goes. All right. So let's go ahead and do it. Okay. If you were somebody that said, I think the highest percent somebody had on here was about 85%. If you were somebody that's like, no, I'd really like to wait for 85%, go ahead, calculate what's 85, 15% left of our $1.17, and then go ahead, put that order in so that if it races up, goes there, we're not trying to catch it, that the system will just automate that trade for us. Okay. For now, let's go ahead and buy it back and lock in the gains. So we're going to go buy back these two contracts. This is putting a natural price at 0.4. I'm going to go down to that midpoint of about 3.8, see if we can get filled at the midpoint price. Hopefully that will fill us during our class. Boom, there it goes. Now, Kevin says, 100% if it's a stock I want to buy anyway. You bet. If it's a stock that you're like, I'm happy to own it, then you might have a different philosophy towards that. Like Kevin is saying, I want all of it. Meaning he's willing to collect the premium, let it sit out there, and just kind of watch and see if it will expire worthless. Okay, that's certainly an approach some people could do. And this is actually the kind of stock that, it was up here at 21.88 today. So that is certainly quite a bit above 117. Okay, so just kind of depends on your perspective there. Well, I want to show you some new trade setups. Again, the idea is if we see something that's moving, we would love to hop on the coattails of that momentum and that movement, see if we can't profit from that, right? Something that's already moving that maybe is giving us a bounce, a hold, a breakout of a price pattern like a flag or a triangle, or a breakout above resistance. Now, I ran that same scan here earlier today, and I actually posted some of the results on my X account for those of you that are kind of tracking with that. Let's see if this one is still looking good. I think it is. 10 cent. This particular stock looks like it broke above kind of some short-term resistance here, right? Around 1950-ish. Today, it had a strong move on that MACD, really pushing higher. Now, it's early in the day, so we don't know if it's going to break out with it, what do we call that? Maybe some extra volume, 130%, 40%, 50%. It's down from that right now, but it's kind of early in the morning to know if it's going to get up to that average and go beyond it, okay? That'll be a more convincing breakout if it does. Now, this is just a $20 stock. And so in your mind, you might think, man, what strategy might you consider doing here? Okay? Think in your mind on the PowerPoint I showed you, all those bullish strategies, we could do any of them. I am going to open up the watch list here. I'm going to shrink the calculator. I'm going to open up the watch list. Here's our TME ticker symbol, and I have a column here that's a 1 month % change to give us an idea. Is this moving a lot? Is it moving a little bit? If it's something in the single digits, maybe we might choose a different strategy for it. If it's not moving, I'm going to say a lot, and you get to determine what's a lot. It's moving about 12% in the last month, so it's a decent mover for us, okay? Jack's noting that the futures just dropped. That could be the case. Maybe the market's pulling back. You never know what comes out of the White House has a real quick impact. If you find out what that is, feel free to chat it in. All right. On this particular one, it is having a little bit of that breakout. And it's looking like it's in a steady position. I'm just going to come out here. We're just going to do August 15 contracts. These monthlies, there's only 11 days left, and so some traders might go, there's just not a lot of time to sell there, or a lot of time really even to hit a target, especially if we try to get out 5 to 10 days before the trading window is due to expire. That's kind of a gauge that some traders will look at, right? That 10 to 5 days. So we're just going to go out to August. You can see I've got my open interest column here. And on this one, we're going to do a long call vertical. We're going to see if that stock in the next 39 days can move $1. Okay, if it's moving 12% on average a month, the high today was 21.36. 21 is going to be where? It's going to be a stretch. It's going to have to move. Okay, it's going to be pretty close to where my mouse is here. Okay. Some people might say, that maybe is stretching it a little bit, because it is. It's going to say, hey, stock, you've got to move for us. We'll come back here. Some of you might be inclined to say, well, let's sell a short put vertical, and you certainly could. I was hoping to see a little bit more open interest out here to delve into some of those contracts. The put side doesn't have nearly as much open interest as the call side does. So that's kind of why we're going to opt for the long vertical. All right. This is pretty similar to when I pulled it up earlier. A 45 cent is what our risk is to make what? 55 cents or $55, right? We're risking 45 to make 55. Okay. That should, just if it were able to do that, that would be like over 100% return. If we could get a chunk of the 55, let's do the same thing. Let's put in an order to buy it out. Chris wants to know if I can show you the scan again. I'll go back to that, Chris. I'll bring it up just real quick so you can take a note on it. But I'll also put the link in our class notes for when we finish up here. Okay. Let's come up to the calculator, 55 cents. And let's go with, right now, 55 cents is a hearty return. What if we can get 70% of that? Would you be happy with 70% of that? Let's multiply that by 0.7. Maybe that didn't stay in there. Let's try this again. So I think that's right. It's going to be 38 cents is going to be 70% of our 55 cents. Okay, so let's add 38 cents to our 45 cents. We're going to go buy it back at about 83 cents. 83, 84, wherever you decide that can go. Now, because we're willing to risk $400 to $500 on any trade, what we're going to do here, we're just going to do 7 contracts here. Where did 7 come from? I'm looking at how much open interest we have here, 148, and say 8 contracts here today. So there's a little bit of activity, but we don't want to be more than 5% of those contracts for the contracts that we decide we want to get into. So if you're trying to position size from that point of view of what's too many contracts or what do we want to stay below, let's do this. I'm going to write down in our scratch pad, I'm going to say we're going to exit at 83 cents. Okay, that's going to be our exit. But let's do this. If we have 148 plus 8, so we've got 156 contracts out there. We don't want to be more than 5% of it. Let's see actually what, let's do 95. Okay, what is 95% of that? Actually, I should have done I did that wrong. I should have just stacked with the 156 times 0.05 because we don't want to be bigger than 5%. That's saying about 7.8 contracts. And so that's why I said we're just going to go with the 7. Okay, so let's bring that in here, our 7 contracts. Let's create an opposite order. Let's go back to our original order. I've got to change this first trigger sequential. Now we should create our opposite order. Now we can put in here what? We're going to put in 83 cents. And if we get it, we're going to be happy campers. We're going to let the system lock it in, be on our way. All right, let's go ahead. Let's save that and send that on. And we're going to put it in our bucket of trading a smaller account. Now, I also have Barb's login information for the account she uses with this particular class. And when we get back together on Friday, we will also take a look at some of those positions and see what is happening with them. Some didn't have much opportunity from last Friday to make a big move, so we'll check on those in Friday's class. Okay, Susan says, how did you create that opposite order? All we did is we had the order sitting up here. Let me just kind of cue it up again here. So what I did here first, actually I didn't do it first and I should have, is we wanted to say, hey, we're not just going to put in a single order, we're going to do a first trigger sequential order. Okay. Then anywhere on the green you can do a right mouse click and say create opposite order, and then it created this opposite order for us. Okay, so pretty easy thing to do. Now, I do believe, and I could be wrong, Michael helped me out here. I think I saw that we had a survey out here. And with the surveys, you know, we'll kind of take your pulse from time to time about, you know, how is this class doing for you? You know, on a scale of 1 to 10, hit the radio button, pop, pop, you're done. There are also 2 questions if you want to fill them out. I love for you to use that as real estate to communicate something to me that you're like, hey, I'm having a problem with this, or I'd like to see this, so that I can incorporate that into our up and coming classes. Okay. Now, question had been here earlier, how do I find that search that I taught you? Okay. So I'm going to show you 2 different things. Number one, I'll pull the scan up real quick because I still had it open here this morning. Let me kind of scrunch it down. So we're just looking for stocks over $10. They've got to be up 1.5% today. They have to trade over $1 million in volume because we're looking for liquidity in the options. And it has to be up at least 15% in the last 65 trading days, which is about a quarter. has to be up about 5% in the last 21 days, which is about a month. So short-term uptrend up, or short-term trend up 5%, intermediate trend up 15%. Okay, that's what we're looking for. Now, the other thing I wanted to show you is here. If you are a subscriber to our Trader Talks channel, then you can come into our playlist and you can find it off of our playlist as well. I'll show you another place where this, and only the search is showing here. And that is going to be in getting started with Thinkorswim. And got a special list for this. However, I know we made some changes to it last week. Maybe we did not do this one. Okay, so then what I'd have you do is just come out here, go to the Trading a Smaller Account playlist, come down and find that class. Usually it's about 7 rows down. Most of the time it's going to have Barb's face on it because she's the one that typically teaches this class, right? So you come down, find that watch list, Trading a Smaller Account. Looks like my face is actually on it this time. Okay. And then the actual class that I showed you the scan in is this first one up here that says a scan to help you spot them. Okay. And we did that in the first part of our class. So when you go in there, you'll know pretty quickly, you'll be able to see how to do that. All right. We are going to head back here. Mike, thank you for reposting that survey there and the script. Appreciate you sharing that script. We always have to say they're not guaranteed as to accuracy or timing on that. Now, Marcus says, do we have to set the scan up in our live account? The answer is yes. You've got to do it in your live account and then run it. And then you can share that watch list, whatever comes back, share that watch list with yourself and just go up here into, once you create that URL, set up, open shared item, then you can put it in here and then go ahead and import so you can have that list. These study filters don't work in paper, so that's why we have to do it on the live side. So if you're running into that, Marcus, that is probably what's happening to you. Yep. All right, next up, we've got some other things moving along pretty decent here this morning. Let's see if this one is still moving along here. Looks like it is, Roblox. This is actually a little bit of a newer stock. And if we're looking at maybe what kind of an entry it might have, we could look at a couple of things. The MACD is rolling up, so we're seeing the momentum starting to shift that direction. It's been bouncing off this 10 exponential moving average pretty nicely, right? So it goes a little bit below it sometimes, but not that far. So, maybe the last couple of days, we could consider it bouncing off that moving average. Or if somebody says, maybe it had a very short-term pullback, and in that short-term pullback, the low candle day technically, I believe, is going to be here. All right, when I went and checked it out earlier, it went a little bit lower here. The high was 103.88, but it didn't close there on Friday. Now, it's moved beyond it here today. And so for some of you, that might be a close above the high of the low day as far as an entry signal goes. All right, let's hop over to the trade tab. Now, with the price of the stock at 107, in your mind, I want you to answer, what kind of strategies do you think you might be looking for? Okay, what kind of strategies on a higher price stock in a smaller account, what kind of trade do you think you might be looking for? Now, I'm hoping that in your brain, you're saying we should do a vertical, right? Because these options are really expensive. I just come down here to the August 15s here, over $1,000. That does not meet our rules for our class, right? We wouldn't be able to trade that. So in your brain, I want you to be thinking, yeah, we need to do a vertical. It can be a short vertical, could be a long vertical. If a stock is maybe dinking around and maybe it's not moving very quickly, some people might say maybe that's a better candidate for a short foot vertical. If a stock is moving along fairly helpfully, right? Like staying above its 10 moving average. And so people might go, okay, maybe we could do something where we expect a bigger move out of the stock. Maybe we'll do something like a long call vertical. Okay, so let's take a look here. All right, you guys, I like you. You're thinking, right? Frankie, John, yeah, looking at short put verticals, long call verticals. Absolutely. All right. Now on Roblox, one thing that's nice about it is we do have some weeklies here. And we're going to come in here. We're going to go on the shorter side of the weeklies. We're going to go with these July 25s that have 18 days before they expire. Okay. We have quite a bit of open interest here. If there wasn't open interest or volume activity today, we would just go out to the August options. We'd just go out to those August 15s and use those and not try to poke around in the weeklies. But here, one thing that's nice on these weeklies is we have $1 increments that can help with a smaller account and give you, several choices depending on what we're seeing here. Now, one thing that's kind of interesting here today, look at kind of the volume activity. Okay, so this morning we only had 27 open interest contracts, but there is volume here today about 336. Okay, so this stock is moving a little bit. Okay, we're going to do a long call vertical, but we're going to spread it out by 2 strikes. So we're going to say buy vertical. And instead of going 107, 108, we're going to change this to the 109. Well, actually, maybe we won't. The 109 doesn't have as much open interest. So actually, we're just going to go the $1 wide, 107, 108. Again, really nice if you have a smaller account that if you needed to be, capped in one lot, it's okay. You could do one contract, $55. That's your max out of pocket, because maybe when you're sizing to your account for where it's sitting today, maybe that's what you can do. In our class account, we actually can do a little bit more than that. We could risk here, I think we could do, let's go 500. Let's divide it by our max theoretical loss at this point, which is going to be 53. That says we can do 9 contracts. Okay, so we're not going to do more than that. We are just going to do the 9. So let's pull this up. Got our 9 contracts. We've got our first trigger sequential sitting here again. It normally doesn't sit there. Usually you have to change it to that. And then we're going to put in an opposite order so that it grabs our number of contracts that we have here. And then again, we're going to put in, if we get a chunk of it, we're going to be happy campers. I don't know where, if it's true where you are, but in where I live, it's watermelon season. And a couple days ago, I took some time to cut up a big watermelon. And I was noticing my technique, slicing up the watermelon. And, I could be really careful and just try to cut the rind off really carefully, right? Try to get as much watermelon as I could. But I found my approach is kind of like what I do with verticals. I get most of it. I am not going to worry about small little margins where there might be a little bit more meat of watermelon. Okay, I'm just looking for the big chunk of it. Okay. So a big chunk of in this case, it's instead of being 45 cents, it's going to be 47 cents, max theoretical gain, times, let's do another 70%, okay? Times 70% means we're going to look for 32 cents added to our current net debit at 53 cents. And so, okay, we're going to buy it back at 88 cents. All right, so we're going to pop that in here. We're going to let the system do it. We could be out golfing, having a great day. Let Thinkorswim execute that order for us, right? We're not having to try to catch it. Let's see here. There we go. That time it stayed in there. We're going to make it good till canceled. We're going to hit confirm and send. We're going to send it to our trading a smaller account basket. All right. Hey, we got filled right away. That's happy news, isn't it? We like to see that. Probability trader is asking like what stocks are in the watch list, and Mike may use a different watch list. I know I do chat for Barb's class sometimes in this class, And a lot of times she'll use the NASDAQ 100 and the S&P 100 as candidates because of the liquidity. Love using those types of stocks as well. Let me show you a couple of charts. We're not going to have time to do both of these trades, but I do want you to see both of the charts, okay? Uber. I do believe Uber came back on our list here this morning. We're not seeing that whole, oh, it's right down here at the bottom. You can see that blue right there. Okay, there's our Uber. Came back from the scan. What's it doing today? Nice little breakout. Look at this. Kind of have some peak up there, about 93 and some change. Trying to get above it again and again and again, just not having it, right? But then today, finally, it pushes through. Now, it's not, we don't know if it's going to close there. We're hoping that it does. MACD is surging again here. Volume is almost up to its average volume today. So that could be an indicator that, yeah, there's a lot moving in on this move that it has, okay? So that's one that we could put together a spread on. The other stock I'm going to show you, if we have time, that we were looking at is Dash. DoorDash coming up. It's been a nice mover. Look how nicely it's been staying above that 10-period moving average and just kind of bouncing off of it so nicely. And so some traders might like that as an entry point here as well, looking like taking a nice little bounce. Now, there's no guarantee it's going to close here. I know markets are down and they could suck out some of that up action. So some people might choose to wait until the market's closed before they get into a trade like this. On Dash, we are going to use the October 15 strike prices. Look at this open interest. We've got lots and lots of it out here, okay? Again, it's a stock that's moving pretty good, so we're going to do another long haul vertical with it. We don't mind going out a little bit. It's an expensive stock, so I hope your brain was going, yep, we should do a vertical there, right? 240 by 250, so it's going to be $10 wide. And this one, let's go ahead and just kind of maybe lock that in place. We're willing to risk 493 to gain what? 10 minus 493, that's going to give us what? 507. That is going to be our max theoretical gain that we could have on this trade. In these trades, we have a fixed potential gain and a fixed potential loss. And sometimes people are like, oh, I kind of want it to be unlimited gain, like just doing a long call. But when the stock is expensive and we see a nice move on it and the contract's expensive, that's why it's so helpful to be able to trade, you know, just a vertical on it. So we're just going to do one contract here. All right. We're going to do a first trigger sequential. We're going to create an opposite order. We're going to quickly do the math of 5.07 times. Again, you don't have to use 70%. Let's go on this one. Let's go 75%, okay? Times 0.75. That says we would be happy if we got 380. Okay, so we're going to add 380 to what's already sitting out there. So 3.8 plus 493. So we need that net debit to get up to about 873. All right, gets there. We are going to be happy campers. We're going to say, get us out of the trade, execute it for us. If it happens tomorrow, like a couple of our other trades that it did that I showed you, if it happens the first day or two, sweet. That just frees up our account to go out and look for some additional trades. All right, there we're going to put a good till canceled. It should have plenty of time to make that move, and it's a stock that really right now is moving kind of aggressively, staying above that 10-period moving average. Let's go ahead, send that in, send that to our trading a smaller account bucket. And I'm going to track that this week as well. Let's see. Somebody wants to know, is there a market breadth and sector, or rather a market breadth and sector breadth study in Thinkorswim? Not one that jumps out at me to initially think about, to turn you on to. There's the trend. I think the trend is in there. That can be a market depth. And another thing some people might want to know is, well, how much of the market's participating in it? On your Thinkorswim platform, you can go out to your visualize, and that'll show you what stocks are participating in that. So fantastic question. Well, you guys, my time is up. It really flies in these classes here. Appreciate you being here, your input, your questions. I can tell you're engaged. Appreciate the comments that you're making, all right? I'm glad to know that you're kind of trying to follow the same train of thought as far as when we're teaching you use these vertical strategies. It helps you build your account, or it can, I can't say it will, it can help you build your smaller account in just little chunks, right? That's all you're looking for, these little chunks. Mike, thanks for helping us out here today. I will remind you there is a survey out in the chat. Appreciate your participation on that. Follow us, and if this is helpful for you today, go ahead and like the webcast. We are going to have coming up next James Boyd coming up right at the top of the hour. So we'll catch you in a few moments. Bye-bye.